And our PCR also further improved 89.10% with an year-on-year incremental of improvement is 179 basis point. Our credit cost continued less than 1% second quarter consequentially. That's a year-on-year decline of 21 basis points. Our gross NPA also has come down to 4.23% year-on-year decline, that is 112 basis point, as against our guidance of this year 4.5%. But we are well within that guidance of 4.5%. As against the 4.5%, we are at 4.23%. Our net NPA also has drastically come down, and year-on-year decline is 46 basis points, 1.27%. The our other key highlights is our whatever the credit growth we have shown that more than 11% is driven by a RAM sector. The RAM sector has grown at 13.52%, and in that the retail is grown at 11.68%, agriculture and allied activities at 18.69%, and our housing loan grown at 10.81%, and the vehicle loan grown at 14.03%. Our earning per share, it is now stood at 80.23. That is in a growth of 37.26%. Our net interest margin, last year our net interest margin, average net interest margin is cumulative figure was 2.95. As against that, the current financial year, the total financial year cumulative net interest margin is 3.05. We could improve 10 basis points in the net interest margin, though there was a tough competition in the deposits and liability to rise in the liabilities. Our return on equity continues to be the best, that is around 22.06 with an improvement of year-on-year 257 basis points. These are all the some of the few highlights I'm sharing with you. Anyhow, we already shared online the entire the presentation, whatever it is there. And I request now you all to please raise your clarifications or queries or whatever it may be. We are ready to show the reflection on that.
Thank you, MD sir. So as I mentioned, guys, from the media, please raise your hand and we'll come to you in an orderly fashion. So we will start with Hitesh. Please identify yourself and ask your question, please.
Hi, sir. Good afternoon. This is Hitesh from Indian Express. I just want your outlook on credit and deposit growth for next financial year.
See, generally, always whenever we give that guidance to the results, we give in a conservative manner. Last time we have given a deposit growth rate at 8.5% and advances growth at 10%. And we have grown as against that the deposit is at 11.29% and the advances is at 11.34%. And this time also we have given the same conservative guidance of 10% and the deposit is at 9%. But we expect that our credit growth may be in and around 11 to 12%.
So my next question is on RBI's recent draft guidelines on project financing. What is the impact you are seeing on the bank?
These are all only actually you should understand we ourselves have started internally for the last 6 months so that whenever some project finance pay, if any COD extension has come, means we are charging extra rate of interest for that. We are already passing on that the burden to the borrowers. And whatever it is only a draft guidelines, I don't see too much pressure on our either capital or on margins, because a part of this will be passed on to the ultimate customers. And when it is passed on to the customers, and that too it is a part of only the tier 2 capital, and I don't think we see too much pressure on our either the core capital or on the margins on this, because ultimately whatever the risk weight is, you remember last time I shared with all of you, you can recollect that when the RBI has come out with increasing the risk weightages for the certain NBFC and the personal loans, we are the first banker, we have passed it on to that customers. So that anyhow that will be there. So I don't see that too much pressure on our balance sheet on that.
So what is your total exposure to project finance?
See, as on date, it is around 1 lakh to 1,10,000, including all types of things. So a combination of this.
Okay, thank you.
Thanks, Hitesh. Over to Jineet Parmar, please.
Hi, thanks. I only have one question. So basically, I just wanted to understand. So a couple of months back, Finance Ministry they had told public sector banks to do a thorough review of their gold loan portfolio. So wanted to get a sense from Canara Bank as to what's happening there. Did you do your internal assessment? Any commentary on like what's
Sir,
there?
these guidelines have come only recently in the 2 months back, 3 months back. But this review system we have introduced in our bank from 1st April 2024. In our bank from 1st April 2024 onwards, every gold loan appraised and sanctioned by one branch will be reappraised quarterly, 100% sanctions by another branch, another reappraisal system. So this review system is there already in our bank for last 12 months. So it's not a new or any surprise instruction for us. And we completed that exercise and we confirmed to them.
Okay, noted. Thanks.
Thanks, Jeet. Piyush, over to you. Kindly identify yourself and ask your question.
Hi, sir. Piyush here from FE. Um, Sir, on the part where you said that you have around 1.10 trillion of all type of project finance under construction and those who are starting the operations. I understand that these are the draft guidelines, and you said that NIM will not be impacted or your growth. But what would be the number or like amount of provisions that would likely be made to comply with this 5%, particular parameter? Have you assessed that?
And I want to clarify to you that this entire 1,10,000 will not attract that 5%. It's a combination of 3-4 varieties.
Yeah.
One is in the projects under implementation. One is COD extension. One is where the project is being implemented. Still that it has come down. The balance has come down below 20%. And various is there. Combined together, what I shared with you is that's 1 lakh to 1,10,000 crores. So based on that, the still final calculations have yet to be arrived, and these are all very draft guidelines. In this, we are also seeking some clarifications from the regulator, like what is the bottom level? Is there any project minimum funding is there? Any minimum levels are there, and all certain clarifications we are seeking from the regulator. Once the clarifications comes, we can assess what is the exactly impact on our balance sheet.
Okay, thank you, sir. Sir, one query I have on your provisions on Q1Q basis, they have risen around 500 crore odd or so. While not much for NPA, but overall provisions have risen a lot. So, what is the reason for that?
Overall provision?
Provision on a quarterly basis.
You see that it is a month, year on year, you see that there is a reduction. But
Yeah,
when you
I'm
see
talking
that
about
in the
Q1Q.
provision, so when you see that QRQ, the provision has been increased, the total provision has been increased from 3150 to 3650. See, whenever we are comfortable in our balance sheet, we always work on future ready balance sheet. We keep, if any of 1 or 2 big accounts are there, if you expect that the future there is a chance for increasing the provisions, that now we are doing that. In one particular account, we don't want to name any particular account, but that account is not required, but we have provided 300 crores more for future ready.
What sector accounts, sir? If you can't name the sector, you can name, no?
No, that are all privately. You can ask that, our people will share it with that. It doesn't look nice to share the details of that.
Sure, sir. Thank you so much.
Thanks, Piyush. Miman sir from NDTV Profit, kindly ask your question, please.
Yeah. Hello, sir. So my question, I'm from NDTV Profit. My question is on the OPEX side. Your employee costs have risen as basically IT expenses. How much of your IT expenses have you earmarked for FY25, and how much was it in FY24, and what is your pay ahead?
See, madam, last 3 years continuously we are budgeting almost 1,000 crores for investment in the IT. And this year also we assessed that our requirement for capex in that IT is around 800 crores. That will continue. When we are investing that much, naturally the next year onwards, some impact will be there on OPEX when we are investing heavily on the IT. But current year operating expenses increase is mainly due to It is because of the meeting the staff that bipartite settlement requirements. We have completed 100%. Whatever the provisions are required, we have made it. Even for retirement, even retirement benefits or pension benefits or gratuity benefits, we completed 100%. Last quarter, when I am sharing with you, I told that the tentatively we expect that around 150 to 200 crore more provision we have to make it in this quarter, but we have made 350 crores to make it 100% so that there is no burden for the next quarter onwards.
So if you could give a percentage of IT expenses that you're looking to your mark for FY25, you said 800 crores in FY25, but is there a percentage that you have arrived at of the OPEX?
Generally, whatever the budget is, OPEX again, CapEx will be there, operational expenses will be there. The operational expenses, whatever it is there, we see that around 40%, 35 to 40%, it goes to the IT related area. The remaining is branch operations and all.
Okay. Okay. All right, sir. Thank you so much. That is all. I'm done. Thank you.
Thanks, Piman sir. Ben, over to you, please. Kindly ask a question to introduce yourself and ask a question, please. Ben, can you hear me? You're on mute, Ben.
Oh, sorry. You said
Yeah.
this is Ben from the New Indian Express. You said 35 to 40% of your operational expense is only towards IT. And that
No, sir.
comes
Actually,
only,
what I'm communicating. No, sir. What I'm communicating to you is total operating expenses. They are asking about the total operating expenses. What is the percentage of IT expenses? So naturally, that's when you are investing more money in the capex, the IT investments, we are making it IT to make our customer relationship and customer experience more and more customer experience improvement. In that, we are investing continuously on the capex. When you are investing now capex, automatically next year onwards it converts into a OPEX.
All your IT expenses are capex, not operational expenses.
That's what actually I'm telling. Last 3 years, we have invested 1,000 crores each, and this year we are targeted 800 crores. When 800 crores this year we are investing it, next year naturally it will impact around 100 to 150 crore in the OPEX.
Okay. Got it. Okay. And what is I think you are the largest among PSUs, PSBs when it comes to gold loan. How big is your book?
Pardon?
Your gold loan book, how big is it? You are the largest among the banks, right?
Gold loan portfolio. We are the largest, not even the PSU, sir, even private sector also, we are the largest portfolio. As on date, our portfolio is around 1.51 lakh crore.
Okay. And if you convert that into kgs or tons of gold, how much is that?
We don't have any concern on the gold loan portfolio, sir. Our NPA ratio is 0.006, and we don't see any of the events that which makes us so sensitive, concerned about that. And we have a robust verification system. That way, the other, I don't know if the other banks, in our bank, for last 1st April onwards, 1st April 2024 onwards, before getting any indication from either regulator or from the ministry, we ourselves has taken a, since our portfolio is increasing year on year, we thought that the precautionary decisions is better. So we have taken certain precautionary conditions. That is, one is for cross verification of all gold loans by reappraising by another branch people.
Okay,
so 100% sanction of one branch sanctions will be reappraised by, that will be selected randomly by the head office, and those people concerned officer, another appraiser, juror appraiser will visit that branch and appraise 100% sanctions every quarter. So in that way, we have taken protection for that. I don't think we have any concerns on that portfolio.
Okay. What is if you convert this 1.5 lakh, how many tons of gold you hold under pledged gold? How much is that?
That exactly we have to calculate and tell, sir.
Approximately.
Generally, our LTV ratio we will maintain at 75%. With that, you can calculate it.
Okay. And coming to what was the recovery and how much during the quarter and the fresh slippages, and also how much you sold to NCRL or other ARCs?
See, generally we don't active in selling to the private ARCs. Only whenever we do through only NARCL. But
How much was
our
that?
policy is for last 1 year. Last 1 year, our policy is our slippages should be less than our recovery and upgradation. And we are continuing that quarter on quarter. Even in the current quarter, our total slippages, fresh slippages are around 3,000 crores. In existing loans, it is 400 crores. Total together, it is 3,400 crores slippage was there. But whereas our recovery is, cash recovery is 3,161 crores and our upgradation is around 560 crores. Total, it is 3,680 crores. As against the slippage of 3,400 crores, our recoveries and upgradation is 3,000, near to the 3,700 crores. So we are maintaining what we committed and what we are communicating to you. And in that way, we don't see any concerns in the quality of the assets. One more thing I want to share it with you, that our quality of assets are gradually improving. If you see that SMA 0, 1, 2, there is a drastic reduction even quarter on quarter and year on year. And our percentage of 5 crore and above, when we have taken it, it is only a 0.69%. And it is gradually increasing even sequentially also, year on year also. If you see that, there is a reduction on that. We are working heavily on the when the account slip to SMA 0 itself, so that we can work hard on that. We need not to worry too much on the SMA 2 slippage to the NPA.
Okay. And what is your NPA target this year reduction? What do you see by the end of the fiscal? You have been improving upon it.
See, every quarter on quarter, we are improving our gross NPA position and net NPA position. We already given a guidelines in those things also. We want to reach around 3 to 3.5% in 3.25% in the gross NPA and 1% at a net NPA. These are all the guidelines for current year. But we are sure that we will be below than that.
Okay. And are the reports about stress in retail loan, especially personal loans, visible in your book also? How good has been the personal loan book, the unsecured book? Primarily personal loans.
Unsecured loans is not a concern for our bank, because whatever the regulator is always raising their eyebrows on unsecured personal loans. For us, unsecured personal loans, we don't have any scheme for either pre-approved loan or non-customer ko koi loan sanction karne ka system is not there. The another thing is our unsecured loans will be sanctioned only to the salaried class who draws their salaries only from the Canara Bank. We don't have any other exposure. These unsecured personal loans, the total is around 13,000 crores in our entire balance sheet.
Okay.
And their NPA is less than 1%.
Negligible. It's very negligible.
Their NPA is less than 1%.
Okay. Thank you.
Ben, we'll have to stop here. Yeah. Okay.
Thank you. I'm done.
Thanks, Ben. Dipankar from PTI, please.
Good afternoon. Congratulations on good set of numbers. I wanted to understand, given the high interest rate regime, what is your outlook on NIM? And the second question, DFS had written on the gold loan. I just want to understand, had asked all the banks to undertake review for gold loan given between January 1, 2022 to January 31st, 2024. Hello.
Dipankar, there's a disturbance coming from your end.
Okay.
Carry on now. Yeah.
Is it fine?
Okay, sir. You can ask.
Yeah. So DFS has asked banks to undertake review of gold loan for last 2 years, starting January 2022 till January 31, 2024. So have you done that, and what is the finding that you have come across? Although you said that the NPA ratio is quite low, have you assessed on the the parameters on which you were doing and all those aspects which
You
were
asked
put as part of.
you asked two questions. One
Yeah,
question you asked on gold loan.
yeah,
Another one is NIM.
yeah,
Let me
Nim.
tell you, sir. You know that the last year it was a tough conditions for all the banks in India because of the high rate of interest on the deposits liabilities. Even under that conditions, we could show our performance as against the last year average 2.95% NIM. This year we could show a 3.05% with an incremental growth of 10 basis points. We
Right.
are not seeing any much improvement in the liquidity and all at this moment. Still, for retail term deposits, whatever the growth we are forced to offer at higher rate of interest only. That the schemes, whatever we are launched last year, is still continuing on that. And at this moment, we don't see much change on that. But we given the guidance that it is a conservatively at a 2.9, 2.95. But again, we are thinking that it will be last time also I shared with you that we will be able to manage around 2.95. This time also I'm thinking that we may able to manage 2.95 to 3%.
Right. And on the
And the
gold
second
loan
gold
part,
loan, the gold loan part, the government has asked for verifying the 2 financial years. The current financial year, since already there is an existing system that itself has taken care, that has been completed up to date, latest. The previous year the verification 50% already completed. That confirmation we have sent it to the DFS. The remaining 50% we have given a guide timelines up to June 30th that we will complete it by June 30th. So far in our verifications, we have not seen any surprises.
okay, no surprises so far. And I just wanted to understand one more thing with regard to Kasa ratio. Um, uh, as you mentioned that term deposit rates are high. So to balance that, are you having any schemes on ramping up your Kasa?
So if you see that CASA ratio from quarter on quarter basis, sir, the December to March, we are showing incremental growth CASA ratio. That is from December it is 31.65 to March it is
Yeah.
32.29. That means there is a 64 basis points increase in the CASA quarter on quarter.
Yeah.
So whatever the last year first working day we have launched certain 6 products to attract the CASA has started giving the results. And simultaneously this current year also we have launched again few more specific products, like we have launched a Canara Angel targeting the women with a
Okay.
new innovative features which the industry never has offered to the clients. That has got so much attention, and already we got more than 200 crores in the last 1 month in the only that scheme from new customers. It is not from the existing customers.
Okay.
We are continuing to do that. We are also integrating our IT. We are improving our IT. Wherever possibility is there, we are taking the benefits from our IT. We are integrating various state governments, the treasury departments. We are working hard on that, sir. Our entire focus is on our CASA. We are sure that we have given the guidance of 33% and we will be able to maintain that 33% in the current financial year.
Right, sir. Last question, sir. With regard to capital mobilization, any plan for current financial year? And are you also looking to sell any of your subsidiary or associates this year?
So one is our capital adequacy ratio is already very comfortable at 16.28%
16%.
in the current financial year. Our core capital is also at 11.58, very comfortable. So this is more than enough to meet our growth capital, even any eventualities on the basis of the regulatory periodic guidelines. But we are not proposing any for core capital rising from the market. We are self-sufficient with the internal accruals. You can see that how
Right.
much net profit we could earn the last year. That we are also hopeful and confident that the same tempo will continue in the current financial year. So I don't see any chances to come out for core capital. But the tier 2 capital and tier 1 capital, whenever there's a market is conducive for us, we don't hesitate to go for that. For that, next month again, this month and again board is meeting, and the board will permit, based on the board permission, we will share the information to you.
Great, sir.
And
And any
regarding the stake sale in the subsidiaries, sir, we already shared with you that we have proposed our stake dilution. I don't say that selling of the complete, it is a dilution listing. Our two important subsidiaries, one is Canara HSBC, the second one is Canara Robeco Mutual Fund. Canara Robeco Mutual Fund, already our board has approved that dilution to some extent, and the other partner also has given the consent and proper approvals from all the competent regulators. One regulator we already got the approval, and other regulators also, the department, the concerned subsidiary, their board is monitoring that. We are sure that last quarter of this year may likely to come for that listing. The second one, Canara HSBC, also now the stakeholders have agreed to dilute to some extent as per the requirement of the SEBI guidelines, and that also work is in progress, sir.
Okay. Thank you, sir. Thank you for your time.
Thanks, Dipankar. Yeah.
Thank you, sir.
Manish Suvarna, kindly introduce yourself and ask your question, please.
Hi, sir. This is Manish
Hi.
Suvarna from Moneycontrol. So I have two questions. One is on your AIF investment. So in your results, you have mentioned that you have made a provisions of 11.57
11
crores. Yeah. So I just wanted to know what is your total investment in the AIF, and will you continue to do it further going forward in
No, sir.
FY25?
At this moment, whatever is there, final 100%, we have provided that 11.68, and there are no more chances for that.
The second question is on your HTM2 investment percentage. It has been reducing. I'm seeing in your investor presentation from 83 in the previous March of 2023 to 80%. So what is the outlook going ahead?
So the more or less in the same line, it will continue, sir. Anyhow, our executive director is dealing directly with the treasury. Will share his views on that. Mukherjee sir, see Mukherjee sir.
So with regard to our HTM portfolio, let me tell you that our HTM portfolio at present is around 83%. It is more or less at the same level. We propose to continue with that even during this new regime, because that will give us certain advantages in the this falling rate regime. So that is what our outlook is with regard to that.
So means between 80 to 83%, it will continue to sustain going ahead. That what you
Yes,
mean?
sir. Yes, sir.
Okay. Thanks a lot, sir. Thank you.
Thanks, Manish. Appreciate that. Joel from ET, over to you.
Hi, good afternoon, sir. Sir, you mentioned about your loan growth target at 11%, 12%. When the system is growing at 16%, 15%, 17%, aren't you slow? I mean, what is the reason for this slow growth? Because I know that banks bigger than your size are growing faster. Can you just give us some?
No, let me say that. Let me say that our RAM is growing near to the 14%. So the
It's
issue
still
is
slower
only
than the system.
14%, 13.54% our RAM is going. Our RAM is almost nearer to the 60% of my advances. But the only thing earlier
Right.
also 2-3 quarters I shared with you that we have some 60 to 70,000 crores of corporate lending was at much cheaper rate. It was outstanding at our level, various borrowers, which we
Right.
feel that's under the present high rate cost liabilities regime. Continuing that low interest rate exposures with those parties is a loss proposition, and it is creating a stress on our margins. To mitigate
Right.
that, last time also I shared with you that sometimes we are taking it let go approach, or whenever it is coming for the renewals, we are taking a lower exposures. We are not continuing with the same exposures. These exposures we have taken when we are comfortable at the liquidity of surplus liquidity was there 2 years back. We have invested
Right.
that. But now that is a costly affair
How
for
much
us.
have you
That's why
let
we are
go?
taking.
How much have you let go this quarter, sir?
So
How
already
much
the
has
last
corporate grown?
last quarter we are done almost 13 to 14,000 crores. Like that, every quarter we want to reduce it to 10 to 12,000 crores. That's why it is looking like it's a 11.5% growth. Otherwise, in actual terms, our growth is more than 13%.
So 13 to
It's only
14,000
to
you'll have
keep
reduced the book by last quarter.
Yes, sir. That's actually that's so we grow at 13 to 14%, but we rejig our portfolio. that rejigging of the portfolio to maintain that margins. So sometimes we allow that let go approach in that lower interest rate borrowers. That compensation
corporate loan
exercise will continue for next 2 to 3 quarters.
I got it, sir. I just want to know what is the corporate loan growth year on year. If you can give me, you give me the RAM, but what is the
See, as it is now, it is corporate growth advances. It is showing that around 9%. But actually, this is
9%.
after adjusting those things. If you take actual growth, it is more than 12% is there. But we ourselves is taking a precautionary decisions. That is, of course, is reflected in our NIM. You will 100%. I am sure you will agree with me. This is the only bank that's shown the positive growth in the NIM compared to all other banks in the last year.
Sir, I just want to know, because talking of NIMs, you said NIM was at 3.05 this quarter. What was it a year ago, sir? Just wanted to cross-check that number.
Telling about a year only 3.05, but this quarter was the just concluded quarter was 3.07.
So it is 3.2 basis points higher you have got.
Yes, sir.
NIM,
Yes, sir.
year on year.
No, actually the last year it was annual 1 year. Always you have to take at the end of the March annual NIM. The last year annual
Right,
NIM
sir.
was 2.95.
Okay.
This year,
And what
after
is the annual
financial
NIM?
year concluded, 3.05. There is a 10 basis point increase.
Okay. Sir, can you give me your cost of funds, how it has moved year on year?
Yes, sir. Definitely, cost of funds is the first time the last quarter, or whatever the incremental increase in the cost of deposit is 8 basis point, whereas our incremental increase in the yield on advances is 11 basis points. That's why our NIM has maintained 3.07 last quarter.
Okay. Last question, sir. Other income also you'll have done really well this quarter. Is there anything that one-off gains or any treasury? Can you give us a breakup? What is the other income coming from?
So other income, always we focus on fee income, sir. Whenever it comes for that, nowadays we are going for the syndication. We are going for that corporate level undertaking. So downselling, we are doing it so much because our TAT is the one of the lowest in the industry. That is helping us in increasing this. Secondly, we have also centralized our non-fund based business. There we are, because of that centralization, initially we have some teething problems. Now it has been streamlined. And that is giving us a good comfort in increasing the non-fund based income also. These are all the things we are helping in our fee-based
Can you give me the
income.
number, fee income, how it has moved year on year, sir? Can you give me the number?
Just 1 minute. Fee-based income is, you see that now it's the 1941. Previous quarter, it's sequentially 1,772. But last year, March, it is 1905. So the quarter-on-quarter growth is 9.54.
Okay. Thank you, sir, and all the best for the rest of the year.
Thank you, sir. Thank you.
Thanks, Joel. Manju, kindly introduce yourself and please ask your question. Manju, you're on mute. Manju, can you hear me? Are you on the call?
Yeah. Can you hear me now? Good afternoon.
Yes, please. Please introduce yourself and ask the question.
I'm Manju from Indian Banking News. I wanted to know about your liquidity position. Can you hear me?
Yes, madam. Our liquidity ratio is around 140. So as against regulatory stipulation of 100 and our internal policy stipulates 105. We are very much comfortable on that.
Okay, in actual value terms, can you tell me do you have any excess liquidity?
See, we have some excess liquidity. We are seeing that last 30-35 days, we have seen that some excess liquidity, which we are using effectively in the call money market or wherever it is opportunities are there. That's why you will see that other interest income, we are earning good handsome amount last continuously 3-4 quarters.
Okay. Last quarter, you had a board approval to raise Tier 1 and Tier 2 bonds of about 7,500 crore. No? How much of that
yes,
have
madam,
you exercised?
3,500 crore is 81 bonds and 4,000 crores is Tier 2 bonds. And the Tier 1 bonds, 81 bonds, we are almost to 100%. It's a 3,414 crores approximately. We are raised from the market out of 3,500. But Tier 2 bonds, we have not raised from the market because we feel that the rate of interest what is offered on that is not conducive, and we are very much comfortable. We are nowhere in a hurry to raise the capital at a higher cost. We want to that the rates should be softened, then only we will rise from the market, because our CRAR is more than 16%, madam, one of the highest among the public sector banks.
Okay. Said about your cost of deposits and the yield on advances. So you are running off basically your strategies. You're running down accounts with lower interest and increasing the interest rate for the newer accounts that come in. That basically is your
100%.
strategy.
100%.
Yield on advances 11%, and
we are
so
not
what are the loans?
we are not growing at the top line at the cost of bottom line. That's what
Okay.
actually I want to clarify all of you. So top line, there is a heavy demand, and any corporate demand is first Canara Bank only. We are addressing that because we know that our TAT is one of the best TAT among all the banks, peer banks. But at the same time, since we have legacy, so the 60 to 70,000 crores lent at a cheaper rate, which we want to gradually reduce that exposure, which we are cautiously taking a call in the interest of the bottom line.
70,000 to 80,000 crore of loans over a period of time, you want to run down and get fresh
Yes,
loans. Okay.
Yes,
That is why your advances growth is not looking
Yes,
that. Okay. And one
Yes,
more question I had on the gold loan. The gold loans, if you look at the RBI data also, not just for your bank, gold loans are growing at a very fast pace. I want to know who are these people who are taking gold loans? I mean, is the unemployment levels going up, or what is causing people to come for gold loans in such a big way?
No, it's not like that, madam. Canara Bank basically is a South-dominated bank. Our more than 62
Your
to 63
portfolio has been historically
62
high.
to
Yeah.
63. Just 1 minute, madam. 62 to 63% of our branch network is in South India. The South India, the general the customer behavior is they don't keep too much money, surplus money in their savings bank. They keep only the minimum essential amount in the savings bank, and they whatever the excess amount is there, they will invest in where they investing higher returns opportunities are there. That is the tendency of the South India. So that's why whenever there is a surplus money, the South Indians generally prefer to invest in the gold. This is impacting the liability side for us, because that is the reason our liability, our Kasa is the lowest among the public sector bank. But at the same time, that is giving a business opportunity for us in the right side, the asset side. Whenever they need emergency money, earlier in other areas, if you see that they keep for emergencies also in the Kasa. But in South India, generally tendency is they convert into gold. Whenever the emergency comes, they know that by walking any of the bank branches, within no time they get the money. That's actually the profile of the area, madam. That is giving a benefit in the right side, the asset side. But definitely there is an impact on the left side. No, we are sufferers at the left side, because that is a customer behavior. Nothing in the seriously we have to think about that.
Okay.
Manju will need to
What
close
about
this.
your tie-up with fintechs and all that? RBI has been raising concerns about banks tie-up with fintechs. So can you say something on that also as well?
Madam, actually, it is whatever our fintech tie-up will happen. It will happen well within the regulatory guidelines of outsourcing policy. We don't deviate any of the things. But at the same time, any technology innovation, presently we could gain the confidence from the RBI Innovation Hub, NPCI, both the regulator and all the concerned, whatever the industry leaders are there. Whenever they are thinking of any new initiative, we are fortunate that they are making us as a part of that first time banker, and we are the first time many initiatives we became a part of that. One example I want to tell you that recently we have launched a self-help groups journey end to end in collaboration with RBI Innovation Hub. This is in India first time, and we are the first. So when we are continuing to do that, but when we have a collaboration with the fintechs, we will see that it is well within that RBI outsourcing policy. We will not deviate from any of those things.
Manju, we'll have to stop here because there are other media houses
One
waiting.
last question. I just wanted to say from the stake sale, how much do you expect to raise?
Manju, there are already last questions done, so I need to adhere to the other media houses waiting. Kindly come back for a follow-up once you have time.
See, madam, again,
sure.
fintech, you are telling about actually tie up with fintech and advancing to the public. है ना? through fintech's loaning. But say again, it is a we are doing fintech loaning is we are not that much active, madam. We are slow. I can say that we are very slow. One or two products now is also still at a experiment stage only. We have not launched so far any such products. Little conservativeness is there on that because we
Okay.
prefer to lend to
Stake
our own
sale, how much do
customer.
you expect to
Non-customer
raise money in
generally
stake sale?
non-customers generally we don't lend money, madam.
I'm sorry, Manju, we can't take any more further questions, please. Thank you. Sheikh Rashid, please. Kindly introduce yourself and your question, please.
Hello, sir. It's
Hello,
Rishad
sir.
from Business World.
Sir.
So, sir, I have a question regarding the stock split that the Canara Bank has decided to go for. In April month, RBI has also green flagged the stock split of Canara Bank stocks. And till 15th May, the Canara Bank has decided that it will decide the eligibility for stockholders.
Sir, already
So,
we
what
have
is the
given.
rationale?
No, sir. Already the rationale behind that is only thing to you see that because the share price it has touched almost more than 600. So we thought that we should make our share comfortable to the small retail investors. So far, when it's become someone wants to invest in the Canara Bank, they have to invest a higher amounts. If you split that shares into 2 rupees, that will be available at a market much lower rate, so that the small investors can be invited to invest in the Canara Bank. That is the only the target behind that, sir. Nothing else. To see that the more and more volumes are increased in the trading.
Okay, sir. Thank you. Thank you.
Thanks, Rishad. Appreciate that. Preeti, over to you. Kindly introduce yourself and your question, please.
Sir, this is Preeti from Vama and Financial Women newspaper.
Hello.
Sir, good afternoon, sir. Are you
Good
getting
afternoon, madam.
me?
Yes, madam.
Sir, in third quarter, you have reported written off loans as 3936 crore. Can you please quantify written off loan in this quarter?
Written off account is that's a 3068 what the write off is there, madam. In this, whenever you are sending some loans to that the NARCL, shifting of loans are happening in the NARCL. The regular OTS will happen in the branches. Whenever we happen a OTS, the balance amount has to be written off. These are all the major things, madam. It's a regular systems. Whatever is there, it's not the one account I can make out a name and tell that. These are all the process of the system, madam. Every quarter it will be there. So there is a customer friendly policy is there in the OTS, and it's a open. It's a portal driven. And with portal it is displaying that how much amount they can pay so that they get the benefit and all those things. Even online settlements are also there, so many borrowers avail this benefit, and that includes even at the any of the corporate level. Whenever suppose NCLT settlement is there, once the NCLT resolution has happened, you have to write off the remaining balance amount. You can't keep it in your books, that type of thing. Otherwise it's not specifically certain things, one account or two account.
Okay, sir. Canara Bank is known as digital transformation. Can you may I know the number, amount, and percentage growth of digital delivery?
I tell you, madam, just 3 years back, we started our digital journey 3 years back. 3 years back, per annum digital transactions were around 94 crores. In the March month, latest March month, in 1 month, we crossed that figure. So you just from 3 years back, it is a 94 crores. Now in the last year, 677 crores. You can imagine that what the volumes it is increasing it.
Okay, sir. Sir, since I represent the Women's magazine and newspaper, may I know the vision, succession planning in your bank and role of women in that leadership?
We have a women around 32% staff members in our total staff strength, madam. Approximately 23,000 to 24,000 women employees are working in that.
Okay.
And the career of that woman, we can proudly say that we are the only public sector bank having a 3 female CGMs in our bank. That's a CGM is the highest post.
Yes.
That gives you answer for that. And this is the only public sector bank having a 3 female CGMs.
Good. Congratulations, sir. Thank you.
Thanks, Preeti. Thank you so much. Mr. Anil Pandey, kindly introduce yourself and your question, please.
Yeah, this is Anil Pandey from Business Insider.
Hi.
Most of the question has been asked. So I want to know our margin trajectory going from here, seeing the pressure on deposit cost, because correct me if I'm wrong, there is not much space on asset composition side. So on credit composition side, can you just highlight change in composition, because you have already told that you have shaded the low margin corporate loan and other loans also. So
Yes, sir. Actually, the if we subject to thinking that the present liquidity condition continues throughout the year, that may not be the picture. Subject to assuming that the same liquidity position is continued throughout the year, our NIM definitely will manage around 2.95 to 3%. That is actually what we are thinking. And because you know that the asset side, it's a very limited chance for us in the RAM sector to dictate the terms for the customers, because it's a competitive scenario and a market driven rate of interest has to be offered. But in the corporate, you can negotiate with the parties if you are having some advantage from your side. From our advantage is our TAT. We strongly believe that our TAT is our advantage. By using that TAT, we are negotiating with the corporates. That's what actually we are able to do. Because of that only, we are able to manage this. But simultaneously also, we have some excess SLR that also we are using in the borrowing from the RBI window whenever there is an opportunity, when the market pricing is very high for rising the liabilities. We are using this window also. We have almost 8% excess SLR is there. That 8% excess SLR, against that RBI windows, we are raising the funds only at 6.55 and all those things. This is a combination of decisions, sir. We are managing it. And what we could manage in this year, we are hopeful that we can manage in the next year too.
yeah, there is a relief in your results that in LDR, your numerator is growing by 11.06%, but denominator is also almost equal to that 10.98%. So do you have any target of this LDR or credit deposit ratio in your bank?
Sir, generally our CD ratio was now at this 73.23%. There is a scope up to grow up to 75%. No,
it was already 75.26 in quarter 3.
Earlier in the December, it was 75.26%. But
Right.
since the incremental deposit growth is more than 100% first 9 months, there are concerns across the regulator or any other things. And we also has decided that the low income or low interest corporate advances has to be shed out to some extent. It's not that completely. That decisions have brought it back to the 73.23. But now this gap, what we have, we want to fill it up not with the corporate lending. If at all, if we get a better opportunities in the corporate lending at a acceptable pricing, we don't mind lending that. Otherwise, we focus more on the RAM growth, because still RAM growth is at 56%. We want to aim at 58 to 60% in next 1 to 2 years.
Thank you very much. You have
That
already
will take
told that 40,000 crore every quarter you are decreasing. Thank you.
Thank you, sir.
Thank you so much, Anil. Pushpita De, can you introduce yourself and ask your question, please?
Yeah, sure. Hi, sir. This is Pushpita Dey from the call. I just have one. Am I audible, sir?
नहीं, लेकिन उसमें गड़बड़ तुमने क्या कर दिया? हमने भी गड़बड़ कर दिया। शुरू में इनका ढीला था, पूछने वाले कोई नहीं थे। सुन तो लो, बात शुरू में नहीं हो रहा था।
Sir, am I audible? Yeah. Hi, sir. So I
Pushpita,
just
there's
have
disturbance coming from your end.
no, there was some other disturbance was there. He has been muted, I guess. Yeah.
Hello,
Sir,
Pushpita.
yeah. Am I audible, sir?
There was disturbance coming.
Hello, am I
You can
audible,
ask
sir?
Pushpita.
Yes, sir. Sir, I just have one question. So you mentioned about how the bank is planning to increase the IT expenses, I mean, the expenses towards the IT infrastructure to 800 crores, and also the number of customers onboarding, I mean, digital transactions happen increasing over time. So if you could give us an idea how the bank is managing the expenses towards the IT infrastructure, or if there is any revenue stream on the digital platform, how the bank is managing that.
Just 2 years back or 3 years back, we were little backward in the market in the IT. That's why the board has taken a decision to invest heavily on that. But now we became one among the peer banks. That's we are also dominated in the IT. We can proudly say that We are the first banker who launched the business analytics and data warehouse. So such type of innovative things, many things have been come out already. Whatever we invested, either is in the digital lending or in the customer relationship management or any of those the IT related areas, we already invested. But at the same time, we don't want to be complacent in investing in the IT, because we look at that still lot more scope is there, especially in the Gen I. So now the focus is in the current financial year, we focus more on Gen I, madam. By using the artificial intelligence and machine learning, we want to introduce that approach even in your transaction monitoring or KYC, AML, online fraud risk management software, or even customer contact cell, reducing that or even chatbot. These are the areas we identified. This time we want to invest our money on these new areas so that our customer experience can be improved. And our continue to do that. Last year it was 1,000 crores. This time we have budgeted around 800 crores.
So I get that, sir. No, I think what I'm particularly looking for is that how do you plan to generate, or is there any revenue stream from this kind of digital transactions or online banking services available to the customers? How do you plan to generate revenue? Because there is no concrete revenue generation model so far, only for the digital banking.
Madam, IT side, you see, we are the banker we introduced with the API bank, and we are the third banker with, I think, with the 200 features, we are the only second bank. And public sector may be the first bank. That is giving a lot of benefit from the corporate clients. We are also generating dynamic QR code to increase the digital journeys. We also introduced a corporate mobile app. That is the second public sector banks who introduced that corporate mobile app. And not one, even CBDC, we are very active. Any innovative is there, we are the first banker. We have linked our RuPay credit card with our the CBDC or all these things. We are doing that UPI ke saath link kiya, and interoperability in the CBDC. We are the first bank to introduce it. Even to increase the transactions, we have done even self-help group STP journey. That also we experimented, we successfully launched, and now the traction is very good on that. And we are also introducing online products. Now, recently, in the first working day of this current financial year, we launched one online, end-to-end is an online, like a medical gap funding. If some youth, if they have taken the health insurance, when they admit their dependents on the hospital, if they get some gap from the third party to settlement and what the billing has happened by the corporate hospital, that gap you can opt from the Canara Bank by online submission of this request as well as opening the account with us. Such type of innovative product. That product is in India. It is the first time in any bank has introduced. So we are coming out with more and more such online products also, but subject to without losing control. We don't want to be too aggressive on that area, because we prefer to be onboarded first as a customer, then lend to them. Without onboarding as a customer, we are not, our policy does not, we are not keen on lending the people.
Okay, sir. Got it. Thank you so much, sir.
Thanks, Pushpita. Kumud and Mayur, before I come to you, I have a question from Mr. Ram Kumar on my chat. So I'm just going to read it out for the benefit of MD, sir. So the question is, what specific clarifications do you plan to seek on the RBI draft circular on infra loans? Number one. And number two, what is the breakup between RAM and corporate loans? Will the ratio undergo any change in FY25?
Yes, sir. First, our RAM and this 56% is RAM, then 44% is in the corporate as on date. But the current financial year, we want to see that our RAM grows to 58% and the corporate will come to 42%. That is the version there. The second clarification in the draft guidelines, initial stage, this is too early to tell that. So our departments are working on what are the clarifications we have to seek from the regulator. But initial discussions, what it has come out with that, the guidelines does not clarify that whether it is applicable for irrespective of the amount or even any floor limit is there and all. That gives us a clarity more to how much amount generally it attracts that provision and all. That's the immediate clarity what we are seeking from the regulator.
Thanks, sir. Kumud Das, can you introduce yourself and ask a question and keep it brief, please, because we are running short of time.
Hello. Yeah. Hello. Am I audible? Am I audible?
Yes, sir. Yes, sir. You can ask.
Sir, I am Kumud Das from Beach Baj, that is Hyderabad-based newspaper. So I'm in Mumbai bureau. So I just wanted to understand, sir, that you said that Canada HSBC life insurance you are going to dilute. So how long it will take? What is the status as of now?
Generally, that's any listing process. It takes 12 months to 18 months, sir. We are on already
Yes.
started that preparatory work. We are expecting that the last quarter of this financial year or the first quarter of the next financial year, it may come out for the listing, sir.
Okay, and sir, my question is on this MSME financing. Sir, they say that it is a kind of pain point that banks do not come forward to lend them. So, what is the situation in your banks?
I could not understand, sir. What is your question?
MSME, sir. MSME funding to MSME, providing loan to MSME.
No, sir. That claim is not correct according to me. So
In
we are the
general,
public
sir,
sector banks who are taking care of the MSME even when they are in the pain. Will never leave their hands. We are the people
what is
who
that?
takes care of. We handhold them till their RF1 is like that. Only RF2 is there. MSME restructuring is there. When the COVID is there, only public sector banks are taken care. And even now, whenever such stress is there, if the customer comes with a genuine restructuring proposal, we are very much favorable, and our policy permits for that.
Okay, okay. And my last question, sir. There is a report which says that retail lending employee segment, there is a surge in retail lending employee segment. So I just wanted to know or understand at your bank, sir, what is the proportion of employees ratio? How many employees are there into the lending, retail lending?
Sir, retail lending is not a separate part of that branch. We have the public sector undertaking. There is a four-tier system. One is branch banking, regional office, circle office, and head office. The retail processing we have created centralized at each district level. One processing centers we have created. But the branch banking and the lead generation and disbursements, these all the things it happens in the branches only. Our 80% of the people works in the branches.
Okay, thank you, sir.
Thank you, sir.
Thanks, Kumud. And our last question for the evening, last but not the least, Mayur Shetty of India. Mayur, over to you.
Thank you, sir. So my question was on project financing provisioning. You said it's still quite, it's not possible to give an estimate right now because it's not, it's still in the draft stage. What I wanted to know was, are these what's proposed by RBI, is that more stringent than what you would have to provide if this ECL norms come into force? And how prepared are you for the ECL provisioning?
Sir, these are all only draft guidelines. It is not nice on my part to comment on that. But at this moment, what we are thinking is ultimately everybody is expecting that Indian banking industry has to move towards the India's. So they may be preparing us in the various aspects in the process of that instead of suddenly implementing it. I feel that this decision may be a part of that process, nothing else.
Is it more stringent than what you would have to provide under these expected credit loss regime?
I don't think that's more stringent than that bulk. I don't see that. The expected credit loss already they have given the guidelines. Every bank has mentally prepared and they have prepared their own balance sheets to face that. Instead of suddenly introducing it, maybe I feel that they are introducing in the phase wise.
Thank you, sir.
Thanks, Mayur. Thank you so much. And once again, thanks, friends of the media, for joining us for this press conference. Thank you so much, MD sir, and the entire leadership team.
Thank you. Thank you.
Thank you.
Who is